G'day folks, Jim here from FX Charts. Thanks for tuning in this morning, Friday, December 6th. Well, the Euro's a bit higher today. It's broken up through the 136.30 resistance that had previously held it. This came about really because the ECB, having left rates on hold, Mario Draghi was probably slightly less dovish than the market expected. So that caused the Euro to head higher, and the US dollar was generally a little bit weaker all round, really. And this all comes ahead of today's US jobs numbers, unemployment, which is expected to show a slight decline to 7.2%, and also to the non-farm payrolls, which is expected to be 180,000 jobs. Now, the Euro, let's go to the charts here. And the Euro, as I say, it's sitting up at 136.65. Now, there's some decent resistance right ahead. But the FIBO level is about 137. If I actually just take you to the cloud charts, the Euro, as you can see, it's followed the daily cloud up pretty closely. This is the daily chart. It's followed the daily cloud up pretty closely the whole way. Now, the top of the cloud is right ahead of us at sort of 136.90. So where it tops out, and then it heads back lower again. So that may prove a bit of a stumbling block. And I think beyond 137, we'll probably see some decent sellers coming back into the market. As I say, we've got the 76.4% FIBO level up there. Now, if we do break through 137, we're going to head back into this sort of congestion area here. The top there is 138.30. Don't think we're going to go that high yet. But between 137 and 138, I think there's plenty of interested sellers. So any progress beyond there is going to be pretty slow if we see it. But having said that, the 4-hour charts are positive for further gains, and the dailies look as though they're picking up a little bit of momentum as well. So I think stay flexible, but we've already got to wait for the non-farm payrolls, although we do get the German factory orders before then as well. Dollar yen. Well, dollar yen's trading just above its session lows of 101.60. It's toying with this FIBO support here of the move up from 96.5. If we can break 101.60, then I think we can probably expect to see a drop down here to this sort of 101.15 level. There's going to be some protection of 101.50, I guess, but beyond there, 101.15 and 100 sort of 75.80 area will support it. Once again, the non-farm payrolls is going to be the driver of this, and if it's a very good number, the equity markets will probably come lower as the market considers that tapering will be more imminently upon us, and that will probably drive the dollar lower, and the yen will make gains on safe haven ground. So it's certainly looking as though that may be the case. The 4-hour charts are negative, and the dailies look as though they're topping out as well. So that's the dollar yen cable. Well, the Bank of England also left rates unchanged. The sterling actually went a little bit lower on the basis of that, partly I think because it's had a decent run up already, and there's just some profit taking and some lightening up of positions ahead of the US jobs number later. Now, if we can get back below the session low, which was 163, then we're probably heading and take out this sort of rising trend support. That's at 162 3/4, possibly headed back towards that sort of 162.40 area. Maybe that's a step too far, but we'll have to wait for the numbers. The indicators are pointing lower, and the dailies look as though they're turning as well. We've also got some, although the price action has been driving higher, the bearish divergence on the charts tell us that we may have seen a bit of a top there up at 164.5 for the time being, and that the downside is possibly the way to play. Dollar Swiss, on the other hand, that's looking pretty soggy as well. It's broken through 90 cents. It's broken through the FIBO support that we've been watching at 89 3/4. Now, if it can, it's down. It's pretty much on its lows at the moment. But if it can get down around this sort of 89.40-50 level, and goes through there, then we're heading back towards sort of 88.80, somewhere around there. It's a bit early to think that far ahead, although the 4-hour charts and the dailies are both a bit negative. So it does look as though the downside may be the way to play it for them at the time being. The Aussies are doing nothing really. It's holding on nicely above that 90-cent level where it reached yesterday. The 1 hour charts actually show maybe we might be building a small short-term bullish flag for a move up to sort of 91.20 area. That remains to be seen. In the longer term, the 4 hour charts, well, they're pointing mildly higher as well, and we do have this bullish divergence, having had some lower price action. So I think 90 cents is probably going to hold certainly until the non-farm payroll data comes out, but then we'll have to wait and see what happens then. If it's a strong number, then the Aussie is going to have a look lower at 90 cents again, and probably lower. And as I've said countless times before, I think eventually we're going to head down to this sort of 87, 80, 18, 88.5 area where there's very strong support. Kiwi's doing nothing. It's dancing around either side of 82 cents. I wouldn't get too involved. The charts are fairly neutral. The dailies look as though we could maybe have another look at 83, but I don't think we're really going to do too much on that. I think right now there's better things to look at. Eventually, though, I do think the Kiwi will head lower, and that we're probably going to have another look at this sort of level under 81 cents, possibly down here to about 80.30, but that's some way off as yet. So that's about it for now. As I say, we've got the non-farm payrolls, so the jobs data will be all important. Before then, we've got German factory orders, and aside from that, we've in the States there's also some consumer sentiment data and personal consumption data as well. So that's about it for today. Have a very good weekend. Have a good day's trading. Make sure you're square before the market closes, and we'll talk to you on Monday. Cheers.